What is up, you guys? Pete DiCarlo here, and today we're going to talk about Workhorse. I'm about 1 day late, but I didn't get the time to make this video yesterday. But overall, I want to talk about Workhorse and why the stock has dropped nearly 50%. If you guys don't understand anything about Workhorse, if you've never seen Workhorse, you don't know anything about the company, I did make a video on this company doing a deep dive. I will talk about it, and I will actually link the video right here, and as well, I will put the link down below, or you can just search in YouTube, Peter DiCarlo, Workhorse stock. Essentially, one of the biggest things that was going for this stock was the fact that they had a huge potential contract with USPS to make essentially commercial vehicles for them. So if you guys don't know what this company is, to wrap it up, pretty quickly, so we can talk about the news on this stock. Essentially, what ended up happening was this company, you have companies like Tesla and NIO and, basically every single car company in existence now moving more towards electric vehicles. So they're making more cars for your everyday drivers. As well, you also have companies like Tesla and others that are working on semi-trucks. But there's a different type of vehicle that Workhorse and a couple other companies are looking for, which is kind of those business to business or small delivery vehicles. So for instance, like somebody who works for DHL delivering packages, the United States Postal Service, like those little square box cars, the Amazon trucks near you, like not the massive 18-wheelers, but the small ones that drive to each and every property to drop off all the packages. Those are a huge potential EV safe EV space for a lot of these companies to get into, and not only on top of that, but for them to save money and time by using the software that's programmed into these into these cars, to not only save time on faster routes, but also a plethora of different things that this software can do to help these companies out. So if you want a full actual in-depth analysis, not just me, talking briefly about it, go check out that video. But right now you can see on your screen, in the past couple of days, Workhorse has fallen down 70% in just 19 days. And this is what's wrong with the stock market. We're going to talk about the actual news, but this is what's wrong with the stock market. And this is why we see massive retracements and massive fades like this, because a stock can cut its market cap by 70% from highs 19 days ago. 70% from highs to lows can cut its market cap by 70% just because one contract doesn't go through. And it was a massive contract. But in my opinion, a stock shouldn't be trading that high based off of news. Like basically the way that this contract set up was, it was supposed to be released in March of 2020, which was almost a year ago. It was delayed. It was supposed to come out in July. It was delayed. It was supposed to come out who would get this contract in October of 2020. And now finally came out that they're not getting the contract. But let's quickly go over this. Let me make this a little bigger so you guys can read along with me. Okay, so Workhorse Group drops nearly 50% after the EV company is passed over for its USPS contract. Shares of Workhorse dropped more than 50% at one point on Tuesday after the company was passed over for a key contract from the U.S. Postal Service. Amid heightened volatility, the stock was halted multiple times during the last half hour of trading, before ultimately finishing the session with a 47.5% loss and extended hours trading and dipping another 10%. To be quite honest, too, I am very surprised they didn't release this after market close, because normally they release massive news like this on weekends or after close, so you can't really do anything about it, especially if you have options. The U.S. Postal Service awarded the first part of its 10-year multi-billion-dollar contract. This is a huge contract for modernization of the postal delivery vehicle fleet to Oshkosh Defense. The initial investment will be $482 million. Workhorse makes electrical vehicles focused on last mile delivery, and the company currently has partnerships with UPS, FedEx, and among others. So in short, they did not end up getting the contract that many investors were expecting. But the problem is not necessarily that they didn't get the contract. The problem, and this is for any new investor or any long-term investor who's been around the block for a long time, but you shouldn't be trading stocks, in my opinion, that are trading at these types of multiples per their earnings, especially a stock that, like I said, cuts its value by more than half over a single contract being lost. Yes, it was a major contract, but this stock in the past year was up almost 1,400%, and much of that was because Kathy Wood from ARK Invest was purchasing it, as well as this massive contract. And I'm not saying Workhorse can't be an amazing company in the future, right? I'm not saying this can't be a huge investment, potential return on investment, but what I am saying to you guys is that, just be careful. Please be careful with something like this, because, a lot of people are buying in. A lot of people are buying into this. But you have to be careful, because you have to know what you're buying, right? Like, think to yourself, what else makes this company valuable without this huge contract coming? And you might have a bullish thesis upon this company, but still, you have to be careful. Now, if we quickly take a look here at their let's go to their financials right here. Let's take a look at this company. In 2019, the company only did $38 million in revenue. So realize that, $38 million in revenue. I'm sorry, $380,000 in revenue, not $38 million. $380,000 in revenue in 2019. And in the past trailing 12 months, they've only done $74,000 in revenue. So you have to be careful. If they would have gotten that $483 million first part of the contract, that would have been massive. That's why the stock is trading at the multiples that it's trading at. So you have to be careful. Like, if you're buying a company that is worth that much money, they have a ton of debt on the balance sheet, $132 million in debt. And they also have $120 million in assets, $123 million in straight up debt. They have 132 in total liabilities. So 1-to-1 debt ratio, income to debt ratio. And on top of that, they're losing almost $18 million in operating income per year. You have to be careful. Their net income this year, net is a loss of $210 million. So please be careful. Tell me what you guys think. Comment down below. I love to hear from you guys. Thank you guys for all of the support. Hit the like button, subscribe if you want to be a part of my private academy, get access to all my trades live as soon as I take them. As well, you can also live stream with me every single morning for the first hour of market open and get access to 60 hours of courses and lectures. Use the link down below. Use the code Academy90. Start for $10 your first month. Thank you guys for everything. I'm not beating down Workhorse, right? I don't have a short position in this. I'm just trying to explain to you guys, be careful of what you're investing in and understand completely what you're investing in before you just go trying to buy the dip on something like Workhorse. Thank you guys for everything, and I'll see you next time.